Dramatic turn, John Deere, the iconic American brand of 185 years, is slamming the brakes on U.S. production. The companies are moving jobs to Mexico, cutting costs amid declining sales and rising expenses. This shift has fired up political drama, with U.S. President Trump threatening punishing tariffs to keep jobs on home turf. As America's agricultural backbone braces for the fallout, we'll unpack the facts, the impacts, and what it all means for the future of American-made machinery. Buckle up. Let's get into it. The shifting gears of an American icon. For more than 185 years, John Deere has been a symbol of American farming might, but the brand now faces severe challenges. But Deere's troubles don't end with plant closures. The ripple effects extend deep into the trade and tariff battlegrounds, tariffs and the price of progress. The trade landscape is only getting thornier for Deere already. Tariffs have cost the company $100 million this quarter alone, with a projected $500 million hit looming in 2025. The construction and forestry sectors, heavily tied to global markets, are especially feeling the burn. To soften the blow, Deere is seeking tariff relief under the US-Mexico-Canada Agreement, USMCA, and tweaking its global production footprint. Most of next year's orders are already locked in, but brace for 2 to 4% price hikes on 2026 equipment. That's another hurdle for cash-strapped farmers. Behind the scenes, Deere's lawyers and engineers are working overtime, renegotiating supply contracts and hunting for new efficiencies. But with tariffs rewriting the rules of global trade overnight, Deere's future is anything but certain. Before we dig deeper, please take a moment to like and subscribe. It might seem small, but it really helps boost this video in the YouTube algorithm and keeps this vital discussion going. Let's keep rolling and see how this crisis is hitting home for communities across the country. Human toll, communities in peril, the restructurings. Human impact cuts deeper than any quarterly report since March 2020. For over 1,800 Iowans have lost their jobs to Deere's. Shifting gears. In 2025 alone, 287 workers have been let go. 119 from Ankeny, 75 from Ottawa, echoing through families and main streets alike. These layoffs aren't just economic, there's a moral reckoning to Iowa. Lawmakers have introduced a bill demanding that companies slashing jobs return some of the state tax credits they've pocketed. Deere counters that the layoffs are purely driven by market realities, not a betrayal of public trust. Yet for the families grappling with lost income and an uncertain future, that argument can ring hollow. Local economies built around the steady beat of Deere's factories are staggering, with shuttered storefronts and dwindling optimism in towns that wear the Deere logo with pride. The layoffs sting like a blow to the soul, but the challenges extend beyond the factory gates out into the fields where farmers are making tough decisions every day. That hesitation is a ripple that extends far beyond the fields, reaching all the way to local businesses and Deere's own bottom line. Supporting these loyal customers is essential if John Deere hopes to maintain its role as the trusted partner of American agriculture. Let's move on to see how Deere is trying to future-proof its operations through bold investments. Despite these headwinds, John Deere isn't throwing in the towel. The company has announced a massive $20 billion investment in its U.S. operations over the next decade, a sign it's in this race for the long haul. That money will modernize aging factories, fund new construction, and boost workforce development across the country. Projects like expanding the remanufacturing facility in Missouri, adding new lines in Waterloo, Iowa, and building a new excavator plant in Kernersville, North Carolina are all part of the plan. Deere's aim is to keep its brand strong and its equipment at the cutting edge, even as global markets shift around it. But there's no guarantee these investments will pay off. Success depends on more than just fresh paint and new assembly lines. It's about earning back trust and showing farmers that Deere is still their go-to partner. Here at Piston Pundit, we'll be tracking these efforts closely to see if Deere's commitment to Made in America can carry it through the storm. Of course, none of these investments will matter if Deere can't fix its biggest headache: supply chain chaos. Beyond the job cuts and tariff headlines lies another battle: supply chain strain for John Deere. Getting parts and materials has become a high-stakes juggling act. John Deere is in uncharted territory, balancing immediate challenges with the promise of future growth. Layoffs and shifting production highlight the harsh realities of a volatile economy, while $20 billion in investments signal a clear intent to stay relevant in the world of American farming. For the communities built around Deere's green and yellow badge, this moment is both a test and a chance for renewal. The road forward will be shaped by Deere's ability to adapt and earn back the trust of its loyal farmers, workers, and partners. So, we want to hear from you. Will Deere's big investments be enough to steady the ship and secure its place in American agriculture? How are these trade wars and tariff tensions playing out in your local communities? What do you think it will take to keep John Deere's green machines rolling in the United States for generations to come? Share your thoughts and experiences in the comments below. We'd really love to hear your stories and insights. And hey, don't forget to subscribe to date on all the latest in the world of automotive and beyond. Thanks for watching. And until next time, keep those engines humming. You can now check out any of the videos on the screen. There's plenty more to explore.